Good afternoon, Risk Managers Dan Sugar with TrendlineBreak.com. Here's my fourth installment of my 4 to 5 minute educational videos on trend following and trend lines. Let me pull this over before we look at the charts. So today's lesson is going to be the key advantages of trend following and trend lines. Okay, trend lines and trend following has been around for over 100 years. We discussed that in the prior videos. Several banks, institutions, hedge funds been using them. You can apply them for day trading, swing trading, position trading, and investing, all four trading styles, as well as all asset classes, meaning stocks, options, ETFs, futures, Forex, and cryptocurrencies. So, what are the key advantages, folks? Number one, it helps tremendously to keep you investing and trading with the trend, not against it, right? Trends are powerful. Trends tend to perpetuate. A trend in motion tends to stay in motion, right? So they're very powerful, like the ocean and tides and waves. You've heard the trend is your friend until the bend at the end. The bend at the end is the trend line break, but you want to do everything you can to trade with the trend. When you think about it, the majority of your losses are because you're going against the major macro higher time frame trend. Not all of them, but a lot of your losses are going to be because you didn't understand the higher time frame trend and you traded against it. Number two, they do provide a lot of low risk, above average reward, and above average probability opportunities every day, every week, depending on how many markets you're looking at, how many stocks you're looking at. But they generate several opportunities daily and weekly to get in with the trend and be ready for the trend line break when the trend does reverse. Number three, it provides many 4-to-1, 5-to-1, 6-to-1, or more, sometimes 8 or 9 or 10-to-1 risk reward ratio setups or opportunities on your charts, especially on the higher time frames. You go to a daily or weekly, you can get some 7, 8, 9, 10-to-1 risk reward setups on stocks, futures, etc. Number four, it does help you manage risk because you know where you're wrong. And that's where you place your stop order. When you really learn and understand trend lines, when you're buying an uptrend, when you're buying a pullback to an uptrend line after the third touch, your sell stop goes a little south of the trend line, you know? So there's some minutia and some other stuff you got to learn. But basically, when you're trading a downtrend, if you're short, your buy stop goes above the trend line, not by 3 cents or 4 ticks, but you got to give it a little room. But that's part of your risk reward ratio. And then I always tell students and my traders and my posse, the beauty's in the simplicity. It's not rocket surgery or brain science. Once you understand, once you practice and learn and hopefully take my master class or get into one of my educational programs, it's really simple. It's very simple. They're objective, not subjective. They're very objective. It's the trend line's either there or it's not, right? So we'll go into it some later ones, how to draw trend lines and some of the minutia. So keep watching these videos and you'll benefit. But again, it's not rocket surgery or brain science. It's very simple. It's not difficult. It's an easy methodology, and that's what's, like I say, the beauty's in the simplicity. So keep practicing. Take some notes. Draw your trend lines. This week we had a huge down move in S&P and bonds. Oh, that's right. Let me show you that. We got about a minute and a half left here. So here's the S&P, folks. Daily chart. We had three big red candles in a row. Wednesday, Thursday, Friday. The Fed came out and said we're going to have rates higher for longer, which wasn't a surprise or shocker. But look at all these trend line breaks on the S&P daily chart. Some of them are immediate winners right away. This latest one was about 35 or 40 points, but then it came back up, but it closed below the trend line. And the next day, Thursday and Friday, were the big moves. So Wednesday, we got below it, popped back up a little bit, short covering. And then Wednesday night, Thursday, boom, boom, boom. Other ones are immediate winners, 4, 5, 6-to-1 risk reward ratios. So I can go back. There's several trend line breaks and trading with the trend opportunities on the daily chart. And even if you day trade S&Ps or micro S&P on a 5-minute, 1-minute, or a volume chart, it's good to be aware of the higher time frame, the daily, Because if you have a trend line break to the downside on a daily chart, are you going to be looking to day trade from the long side or the short side in your day trades? And of course, the short side is your answer. And then quickly, here's the bond chart. I put a thing on Twitter last week about the monthly had a bear flag going into like last week, and then the bonds just fell apart. Here's the big picture bonds. You got to watch bonds, folks. I've been preaching this for many, many years. Stock market does not like rapidly rising rates. So here's the bond chart. We've been breaking trend lines for many, many months, lower highs and lower lows for a long time on the bonds. But look at some of these trend line breaks on the bonds. You just have to be patient. Here was one for a day and a half. Then it came right back up with a sucker rally and then imploded 4 handles or 4 basis points. But some of them work right away. So you can buy some bond puts. You can short TLT. But some of these trend line breaks are really 4, 5, 6 to 1 or more risk reward setups on the daily chart. So, all right, folks, hope you enjoyed it. Have a great weekend and look for my next educational video coming up in a day or two. Thanks.